Hello guys and girls, and welcome back here for another video on the ChainLog YouTube channel. Today I'm making a video to explain the actual situation, and I'm doing it just to make a video version of my weekly free analysis that I share with the community to give back and to help other people to know about the economy and the crypto market itself. So as you see right now, I'm here on the YouTube channel to do that, but only on the camera, and I'm taking out this camera right here because today I'm going through as you see right here, the actual analysis I made on Twitter, and I'm removing my camera to make so you see everything and my face doesn't get in the way. Okay, so let's go only window and let's go. So I called it standby CPI incoming, and I actually started with Bitcoin and technical analysis, derivatives market, and on-chain data, and then I got into macro and indexes, stocks, and everything else. So I'm doing this again. I made you can always watch my last analysis on Twitter, but let's get into this. We're still in the same area we were one week ago, where we are at the same levels of the metrics, or even below in some metrics that signs the bottoms of the crypto market and Bitcoin itself. So I'm not going through today about that. I'm just actually watching the actual state of the Bitcoin market and so the crypto market itself. Here, this is the chart for the long-term view of Bitcoins, and as you see right there, as I wrote, for what I know, looking at the long-term Bitcoin price chart, we're still being supported by the last all-time high price and the long-term older realized price. That's a metric I share quite often on ChainLog School, and the ChainLoggers will know that. Needless to say anything more, I guess. And this is the long state of the market. As you see, this is the last all-time high, 20k, 19k, and we're still bouncing off there. And also, like right here on the long-term older realized price, that is the you can go to this, like the cost basis of long-term holders on chain. So it is still 19.8, 19.7, and still we're bouncing off from that. Also using it as support. We used it as support in the COVID crash, and we fell below in 2018, actually into 2019, and that was obviously a good time to accumulate. And this is not financial advice, obviously. I said this already. Every time I said this is educational purpose only, and if you seek financial advisors out there, I'm here just to educate and to help out you folks. And here there are two ways from here, in my opinion. One is up and to the right, in which confluence is on our side, as 8 to 10 on-chain metrics out there are calling for bottom. Waiting for a monthly close. I actually shared this also on Twitter, that I was watching this chart, and I asked them where watching this chart people who felt like we are going to go, and probably as you see right here, we are in the monthly. This is a monthly US dollar paired with Bitcoins, Bitcoin USD, and as you see, we are in the lower Bollinger Bands of the monthly candles, and we are probably going to retest here, or I don't know. Obviously, I don't know when, but if it closed like a doji like this, it will probably go right here somewhere. in the middle before obviously retesting the upper bands, and we'll see. Anyway, I did this and also this. That is a strange pattern. I saw 3 red candles, 2 green candles, 3 red candles, 2 green candles, 3 red candles, and what, 2 green candles? I don't know. We will repeat. This is just obviously, as an analyst, I have to say this is pure opium, but still good old opium. Technically irrelevant as a data point alone, but still a data point. And I have to say this because obviously I'm an analyst, I'm not a mage, and I don't like to share or give false hope or share opium without saying it is actually opium. And also, another thing I was watching is these trend lines right here. We're waiting for these trend lines to be broken. Every time we touched one of them, we fell down below. So I'm actually waiting to see this first trend line to break and a retest of the second trend line, maybe for a little drawdown more and then a breakthrough, or going down again. Still waiting anyway, and this could be the actual real movement, the real rally that could happen, or even a bull. But a bull now in this macroeconomic condition, uh, I'm not a huge fan of that theory. I gave them the lowest possible possibility in real term. And another thing here I shared on Twitter also is the area of volatility, as you already said, seen me share. This is the area of volatility in the Bollinger Bands on the daily chart, where the Bollinger Bands are narrowing each other, and the price is narrowing also, and it's compressed between these two bands, and it's still going low. It's still going sideways. Meanwhile, volumes are getting lower, and at some time, sometimes we had this huge drawdown in the last 3 times we had this huge drawdowns, 8 to 11k actually, as I already said right here. Another volatility is on the D chart. Call a doctor, because wherever we go from here, we'll go like a rocket. If you follow me on YouTube, you know what is the bottom area I called on 13 June, and you can watch my video also on there. Target to the upside 24, 27, and 29k at the time anyway. Now could be a little bit different. Expected movement 8 to 11k in any direction. And this is what I had to say about the possibility of an up and to the right. Instead, the other is down. So if we get down from here where we're going, the other is down, in which the only target could be 17.6 and the 14k. Obviously, there is still the 20k area, 19, the last all-time high, but still there is the close and the opens of the monthly candles in that zone. So this is the area of what I'm talking about, the actually bottom area, the huge demand area, and I'm watching for that. Also, as you see right here, this is one of the of my charts where I look for Bitcoin as well. And 17.5k are actually this low here of this candle. So in the derivative side market, option puts are still seeking 19k or less. Meanwhile, calls are going for a 21 to 24k strike price. Majority of those will close July 29th, with more puts than calls on that specific date of expire. And market is expecting Bitcoin to fall back. Actually, as you see, this is all expiry. Is BTC option by interest, open interest by strike price, and as you see here, the major strike price we had are actually 19k, and instead the majority of the strike price otherwise in calls are actually from 21k to 24k, and this is the mean, obviously, the aggregated volume, the aggregating open interest by strike price is not only by date, and in fact, majority of those close on July 29th, and instead in this week, puts are still seeking 19k. Meanwhile, calls are going for 21 to 24k strike price for this week anyway, and still long for the actual aggregate price. Put call ratio is in a downtrend, and this is the put call ratio I'm talking about. Is on 0.6 more or less there, and if you don't know what the put call ratio is, it is just a gauge of the sentiment of the market in options, where 0.7 or more is actually bearish for the market, and open interest is more put than call, and is so bearish for the sentiment of the market. It's like a sentiment indicator. Meanwhile, below of 0.7 value is actually more bullish. And in fact, I said put call ratio is in a downtrend, not in the safe area, but because the safe area could very well be, as you see right here, 0.5 to 0.4 most likely. And anyway, a little bit of bullishness seems to be present in the market, pricing a relief rally to a bull at the end of the year, ranging from 30 to 100k strike price, 14 be more realistic. Obviously, I'm not expecting the price to go at the end of the year at 100k. I'm more watching for a relief rally as of right now. That puts us on 30, 40k at the very least. And this is the actual option open interest by strike price in the overall years. Okay, so this is coming from the end of the year, and so as you see right here, the option that expire on the end of the year are actually this, where we are pricing a strike price of 100k, but more the majority are pricing a 30k at the end of the year. Meanwhile, puts are down very low and very bearish. The majority of people, I think, they got the strike price right, even if the open interest is actually too much on the call side. 80k probably not going there at the end of the year anyway. We'll see, because I'm not a mage. I don't know. In reality, I can't really obviously predict from here to 6 months what will happen. I probably don't. I can give a date, but I know that Bitcoin will rise, and my shirt, as you see before, means it all. And the short term actually is, for the short term, we retested the 2060 SMA, that is the orange line, as a resistance and kept trending lower. That is no good for the short term price action. Still wanting for the price to bounce up above that MA before assessing a relief rally happening. And we're still bearish, as you see right here. Every time we touch the 26 SMA, we're falling down. There's a 12 and the 7th, and we are still below every single MA there. This is the rodel ratio that I'm not explaining right here to not making the video so long. You can, as I already said, even here you can search it on the web. Anyway, it relates more on hodling and the 1 week to and the 2 year hodling, 1-2 year hodling waves, and their realized price. So as you see here, when it's the market is overheated, you feel the fact that the realized price is huge in confront of the 1 week, is huge in confront to the 1-2 years, and instead here is not bottoming, and this could probably be because we having more hodlers this round, this cycle. As we see right here, we had a huge amount of hodlers here in comparison to here, and probably we'll go more hodlers. We'll have more hodlers here, so probably not bottoming. But as I already said, still we have to admit that even in this worst case bear market scenarios, our less conviction still remain intact. So probably we'll never see that particular metric bottom or so, just a little. I wonder if there's still someone expecting holders to capitulate, because I think the base of people that keeps buying no matter what and stacking as soon the price collapse will increase over time. as already said, and I see this on chain metrics, and I gave on the ChainLog school actually daily updates on that. Not every day, but most likely I'm every single indicator on chain that I found useful or important at the moment, I'm putting it out there, and I always cover this every time I watch to the address bands balances. I'm seeing this huge cohorts of others stacking sats and stacking sats no matter what. So this putting a bottom in for Bitcoin in that case before any other asset, and with its bet against the major indexes, probably it will be the first asset to rise in value, and putting X on the bottom range being done with. Anyway, we'll see. For the macro side of things, I'll probably do an update at the end of the week with one live video on YouTube and to assess the new CPI prints going out tomorrow, because tomorrow we have the new CPI prints, and I'll talk about that on the live stream on Sunday 14 p.m. I think UTC, but I'll give the announce on Twitter as soon as I know something about it. The actual hour I'm free from my work, and you'll have of course some news on here as well here on Twitter. Obviously I have two companies, so I'm really busy. For more macroeconomics and study cases, I did an in-depth video on YouTube, and if you didn't watch that, you can find it on Twitter, on YouTube. Is study case 3 debt in the system and how the Fed will react. I covered there the US debt and everything else about what the Fed will have to decide to when macroeconomics unrolls. Times for stock indexes, currencies and more here. The XY is still really strongest. I sincerely didn't expect it to reach this kind of levels, even if I was expecting a rise in value, as I already said right here also, and I covered more time on ChainLog school as well. I was expecting this to be an actual cap and handle pattern, and as you see right here, cap and handle pattern. And it was an cap and handle pattern, as you see right here, and we got to the 1.618 Fibonacci level, and I don't know if we are going to fall below, because this is a huge level of resistance. But if we kept trending higher, because the Fed will keep raising interest rates, and the other banks I'm talking about that anyway in the last few tweets. And this is because in fact the euro weakened today, falling slightly below the $1 value, as you see right here, and because the BOJ keeps on track with their yield curve control monetary policies that puts sell pressure on the JPY to buy back JGBs, and you see right here that they are trying to cover up their JGBs to put a ceiling into their 10 years bonds at 25 BPS to obviously ease and lose their economic policies, and see their economics getting pumped by this we could call it yield curve control to the easing side. And in these deflationary conditions for the US and hyperinflationary for the rest of the strongest economies, I call deflationary conditions for the US because it actually is deflationary when we raise interest rate like that. Like it didn't happen in decades. That is deflationary condition, and in fact we are seeing the US dollars getting stronger and every other asset denominated in US getting weaker. We are going to experience a lot of resistance from the US dollar paired assets also for stocks, indices and commodities. It's remarkable anyway how much of the S&P 500 and the Nasdaq stocks are actually managing to stay above the 200 EMA. Here is the Nasdaq, 14.7% of the stocks are above 200 EMA, and this instead is the S&P 500 as you see, 20.67% are actually above that level. Anyway, still there at level we'll see a recession correction at the very bottom right here from all-time highs. Meanwhile, gold take a nap, as you see right here. Instead, copper and crude oil, Brent oil are going down. Meanwhile, the gold is actually taking a nap, as I already said, because after falling for a cliff, the commodities sector feel the pressure of a stronger dollar and the fears of a recession, with the oil sector suffering from the discovery of a new variant in China and the fears of more lockdowns. This week, Biden will go to Saudi Arabia, first in Israel, to speak with them about an increase in production. OPEC is at its limits, and well, nothing really changed from last week, where I already said they could continue with superb news about OPEC's inability to raise outputs, Libya unrest, less oil export, Norwegian oil worker strikes. Saudis are the only dish on the table for output, and the U.S. strategic petroleum reserve that will be replenished. That will have to be replenished at some point. Actually, that is, and more there rate hikes and more. I'm not going into right now. And there is this week the Sri Lankan resident Chinese assault on the bank for frozen deposits, where you could see on my Twitter we are talking about the China bank protest for frozen deposits and the Sri Lanka presidential occupation, and also we have the Russian gas pipeline being shut down for maintenance, and most people are wondering right now if this is actually it will reopen or not. Anyway, we'll see if this will happen, and we'll see in the very next future, because we have 10 days. You'll find me on ChainLog, obviously, and the other products as if you want to see something, you have the link chainlog.info, and I will be pleased if you just advise my school to any of your friends that wanna learn about the markets, and I'll be there every day watching the market and putting daily updates on with my resources, putting on the Discord, and everything I know, the important news aggregator that I have. Still, I'm there, and I'm making courses still at $7.49 until the 1st of August, with 7 days free trial for everybody that enters the Discord, and nothing. And then on, I will be putting $15, and then I will sell the course when they are finished. Until then, you can follow my courses just for free for 1 week, and obviously you can get more of my daily video updates for $7 and $15. So this is it for today, guys. I hope you enjoyed the content. Subscribe to the channel if you want to have more, and ping the notification bell. Also, help me sharing this video. Everything you've done, comments down below, putting a like, everything is helping me reaching my goals, helping more people. So the algorithm of YouTube helps me better, and so it's really appreciated. Thank you very much for watching and all the support. It really does mean a lot. And you guys can follow me on Twitter. I'm there is ChainLog Analyst, and this is it, guys. This is ChainLog Analyst here that greets you. Cheers.